Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you for coming on today.
Happy to be here.
Well, let's start with the markets and the jobs report that came out last week in the U.S. that sent stocks to further new highs. The U.S. Labor Department says non-farm payrolls in June grew by 850,000. The S&P at a new high for a seventh session in a row. Tell us about the global markets and what you're watching in the coming week.
Okay, well, S&P did hit a record, 4,352. NASDAQ also hit a record, and Dow, while it did not hit a record, it did record a healthy rise. For the week, NASDAQ rose by 2%, S&P by 1.7%, and Dow by 1%. S&P has risen 5 out of last 6 weeks. NASDAQ has risen 6 out of past 7 weeks. Some of the notable increases this week included Apple, which rose by 2%, Microsoft, which rose by 2.2%. They're introducing a new version of Windows 11, which has gotten a lot of press in the last week, and that seems to be actually helping Microsoft rather than hurting it. But the biggest factor is, as you mentioned, the job report, 850,000 new workers. It beat the expectations of Wall Street economists, which was running around 706,000. Now, the reason that the market is reacting so positively to this report is that it's good, but it's not too good. If it's bad, that means the economy is not recovering, so obviously that would be bad for the stock market. But if the job report was too good, then the Fed may decide that the economy was heading toward overheating, and that may accelerate their time schedule for tapering and interest rate increase. But this particular June report hit the sweet spot. A lot of analysts have mentioned that very word, sweet spot. It comes right between the economy doing well, but not well enough so that the Fed may decide to increase the speed of the interest rate increase. Wages rose 0.3% for this month, for the June, and 3.6% year to date. So U.S. job market is doing well, but not too well. So, and while there were some concerns about labor shortages because of the increase in the number of jobs, now they are not as concerned about the labor shortage. I've been crunching some numbers, and based on July 2nd closing numbers, and comparing it to the pre-coronavirus high, that was about 18% above the pre-corona high of February 12, 2020. S&P is about 28% above the pre-corona high of February 19th last year, and NASDAQ is above the pre-corona high of February 19th last year, whopping 49%. So the stock market in the United States is doing very well. European markets, DAX, FTSE, and CAC, they usually follow the U.S., but last week it was somewhat divergent. DAX had lots of ups and downs, but on the average it was level. CAC had a downward trend. FTSE was up early last week, but level at the end of last week. All three European indices are down today. They seem to be concerned about rising oil prices and possible slowdown of the Chinese recovery. Nikkei, Shanghai, and Hang Seng, they were generally down last week, with Shanghai index falling 70 points on Friday. Nikkei and Hang Seng is down 0.6 to 0.7% today, and Shanghai is up about 0.4% today.
And here in Korea today, the KOSPI is up for the first time in a few sessions, and the tech-heavy KOSDAQ was closing in on 1,050 points, didn't quite get there. Tell us about the domestic market.
Okay, well, KOSPI, it recovered apparently because of the U.S. job report. It rose 0.35% today and ended at 3,293.21. It did not quite recover the 3,300 levels that we saw last week. Institutions bought, individuals sold. Foreigners Well, technically they bought today, but only about 500 million won's worth. So you could say that they were more or less neutral today. KOSDAQ, it ended today at 1,047.33. It rose 0.88%. Institutions and foreigners bought and individuals sold. I did the same calculations on KOSPI, comparing it to pre-corona highs. KOSPI, compared to the pre-corona high of January 22nd last year, is up whopping 45%. KOSDAQ, compared to the pre-corona high of February 17th, it is up whopping 51%. So one way to see it is that Korean stock markets are doing incredibly well, even compared to the United States. But a pessimistic way to see it is that it's up so high that there's a danger of falling a lot as well.
Indeed, that'll be on the minds of a lot of investors, to be sure. And to switch gears for a second, Professor, last year with the dollar strengthening because of signs of an interest rate hike to come sooner rather than later in the U.S., last month rather, Korea's foreign exchange reserves actually fell by about $2.3 billion. And today, of course, the dollar softened a little bit, so the exchange rates come down. But what's happening with foreign exchange?
Okay, well, as you mentioned in the last story, the BOK is attributing this to the strengthening of the U.S. dollar that took place during last month, because the U.S. was thought to increase interest rates faster than it was expected in April and May. But right now, I think because of the jobs report, people are now betting the other way, and they expect the U.S. dollar to lose value in the next month. Now, a trend of the U.S. dollar against Korean won was that Korean won actually started out very strong this year. The closing numbers for the U.S. dollar at the end of last year, December 31st, was 1,085.65. It ended today at 1,030.78. Won depreciated until around March, and then it's been holding relatively steady between 1,100 and 1,140. Now, as I mentioned, investors expect weaker dollars for the near future because investors are looking for higher returns in emerging markets. That may include Korea as well. But when the Fed signals that it will start tapering, expect the U.S. dollar to strengthen again. This is why the BOK is sending signals that Korea may increase the interest rate earlier than expected.
And finally, the Korea Development Institute is going to release its regular report on the economy for the month of July. Last month, KDI said it saw a moderate economic recovery continuing, exports strong, consumption recovering. Talk about that, if you would, or what else do you see ahead this week?
Okay, well, the Ministry of Economy and Finance will have their monthly government budget trend coming out on Wednesday, we're looking to see how the second supplementary budget may affect the government deficit and debt. And the second half of the year will probably do better. KDI has made their last prediction a couple of months ago. They predicted that the economy this year will not grow as much as 4% in the last prediction. We'll have to see whether they're going to raise that prediction to above 4% like the government, or whether they'll stick with slower growth as some of the government critics do. And another interesting thing that's coming up this week for Korea is that the legal limit for interest rate goes down from 24% to 20% on Wednesday as well. In terms of foreign statistics or foreign reports, on Wednesday, U.S. FOMC minutes for June meeting will be released. So everybody will be looking at how much discussion there were on inflationary pressure in the United States, and was there any kind of talk about when they will start tapering. And on Thursday, European Central Bank Monetary Policy Governing Council minutes will be released as well. On Thursday, we'll have U.S. oil and gas reserve numbers, and we'll try to get hints on how the oil prices will go for the next few months. And on Thursday, we have China inflation figures. As I just mentioned a couple of questions ago, there's some questions on whether Chinese recovery is slowing. If Chinese growth is recovering, then that will have major consequences for the global economy and Korean exports.
All right, Professor, we'll have to catch up on all of that later this week. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.